3 Supertrend calculations running in Confluence, filtered by ADX, higher timeframe bias, and volume. This is how a triple consensus trend system cuts down on noise in choppy markets. At its core, this indicator builds on the classic ATR-based Supertrend framework, but layers in 3 independent trend engines: a primary line with an optional adaptive factor, dynamically scaled using percentile ranking of ATR over a lookback window, plus a fast and slow variant running in parallel. Rather than reacting to a single trend flip, the system checks how many of these 3 lines agree on direction before treating a signal as valid, a structural approach to filtering out low-conviction trend changes. The adaptive smoothing layer feeding the primary supertrend can be configured with one of 8 algorithms: SMA, EMA, RMA, WWMA, triple VWMA, HMA, a custom Llama slope projection filter, or a Kalman filter that recursively updates its estimate based on prediction error and gain. Each produces a different balance between responsiveness and smoothness in the underlying price series used for trend detection. Confirmation logic stacks multiple independent filters before a flip is considered valid: an ADX threshold filter for trend strength, a higher timeframe directional check via request.security. To align with broader market structure, a volume filter comparing current volume against its moving average, and a cooldown mechanism that suppresses rapid resignals following a recent flip. A real-time dashboard displays the state of every filter component, the current consensus count, and trend direction. For structural reference, the script can plot ATR-derived risk levels, a stop-loss distance, and 3 reward tiers expressed as R multiples, purely as a visual framework for understanding volatility-based position structuring. JSON-formatted alert payloads are also included for those studying webhook-based automation architecture. Educational takeaways **. How triple supertrend consensus filtering reduces reactivity to single-line trend flips. The mechanics of 8 different adaptive smoothing algorithms, including Kalman filtering and slope projection methods. How ADX, higher timeframe, and volume filters combine to build multi-layer confirmation logic. The construction of ATR-based risk frameworks using R multiple reward tiers. How JSON alert payloads are structured for webhook automation studies. Warning: educational software for analytical purposes only. Trading involves significant risk.